Hello everyone, my name is Nikita, welcome to the Cryptus channel, and today we've got the coin and project review which in the near future is capable of making huge access. In today's video we're reviewing SmartCredit, and before we're going into the coin price and the market stuff, we need a basic understanding of the project itself to see how it works and get a concept of the functionality as well as the application of the token. So SmartCredit is a decentralized P2P platform which connects borrowers and lenders without intermediates. Well, the project is offering a marketplace on their website where a person can say, yo, I've got so and so much money to lend, take it. Or a different person might say, I need a certain amount of money, I need to borrow it. Basically, once the two sides find each other and they agreed on the conditions, SmartCredit is taking the money from the lender's wallet and is sending it over to the borrower's wallet. And the borrower is obligated to give the money back to the lender within a certain period of time and pay an interest fee to the lender for letting him using his money. And all transactions are made with Ethereum. In other words, one person is lending Ethereum to another person, and then it is returned with extra percentages. And the benefits for the two sides are that the borrower gets money that he needs, and the lender earns interest. But there are two questions that are raised here. First of all, how does SmartCredit ensure security to the lender? I mean, like someone might borrow your money and then just disappear or refuse to give it back. So how do they handle this issue? And the second thing is, what does make this project so unique? So what does the project have that no other project has? Let's start with the security issue first, because if there's no guarantee that you're going to get your money back, you won't agree to lend it to random people in the first place, right? So SmartCredit claims that they have developed a multi-level risk control system and that it's working so well that in case if the borrower doesn't return the money to the lender, SmartCredit is going to handle the loan for the borrower. So for example, imagine a case in which we are the lender and we gave money to some person and he disappeared, he didn't pay us back. So in this case, SmartCredit is completely going to refund the funds that we have lended to the person. And of course, it's not profitable at all for any company to pay for constant system abuse. So what the people at SmartCredit did again is a multi-level risk management system, and it considers the customer's transaction history, additional submitted ID information, submitted information from Facebook, LinkedIn, eBay, and so on, and also the lending history on the smart contract IO platform itself. And regarding this information, SmartCredit is giving every user their own credit score. So basically, just like with the banks, you've got a credit score, and if you have a good credit score, you're getting the loan. If you don't have a good credit score, you won't get a loan. But with SmartCredit, the credit score goes a little bit deeper and it affects some other kind of things. So as I said before, SmartCredit needs to somehow finance the financial loss that they suffer from taking over other people's loans. So what they can do is they will ask for collateral up to 1/3 of the borrowed amount if the credit score of a person is not perfect or is not good enough. It isn't always going to be 1/3 collateral of the borrowed amount. It's ranging from 0 to 33% basically. And the credit score will determine how much collateral you will need to give to the system for basically using the money. Furthermore, also in regards to the borrower scoring, the lender is required to make a payment into the loss provision fund of the system. The loss provision fund is basically a place where the money comes from in case if the borrower doesn't return it. So the better the scoring of the borrower, the less the lender needs to contribute to the loss provision system. And the payment into the loss provision fund by the lender is like a required thing, so it's not optional, you must do the payment, so there's no way around it. But the interest rate from giving your money to someone else is still going to be much higher than the payment into the loss provision fund. So there's no way around it, but you're still going to make profit as a lender. And of course, another important thing is that the platform does require KYC, as for the borrower, also for the lender. And first of all, KYC is required to prevent fraud loans. So basically that just random people don't take loans and then disappear with the money. And second of all, SmartCredit preserves the right to bring the matter to court in case if the borrower does not return the funds in the required time. So as you can see, SmartCredit did this whole thing like really secure. Even if the person disappears with your funds, with your money, then smart credit, the loss provision fund, is still going to repay you the Ethereum that you lend the person. And by the way, whether to repay you the money or not, this is not a decision that some person at smart credit is making. No, it's literally in the program code of smart credit. So basically, if you don't get your Ethereum back by the required time, then automatically the loss provision fund is going to repay you the Ethereum, and all the other matters with the borrower, smart credit is handling themselves. Well, congratulations, now we've got a fundamental understanding of the project itself, and now I'd like to focus your attention on a special feature of smart credit which differentiates the project from all the others. Well, usually when we're lending money to some other person, we are getting rid of the money for a certain period of time, because we can't use it for our own payments. Well, yeah, because we just literally took the money and gave it to a different person, and now he has it, I think. We got the point. And smart credit is basically solving this liquidity problem that we don't have the money when we lend it. What smart credit did here is best explained with an example. Imagine that we're lending 1 Ethereum to a different person. Doesn't matter who, just for this case 1 Ethereum. What happens is we're making a transaction and the Ethereum flows from our wallet to the wallet of the borrower. And at the moment that our Ethereum flows from our wallet to the wallet of the borrower, we're getting a temporary coin called CreditCoin. CreditCoin is a native smart credit coin, and it's always given to the lender in the ratio of 1:1 to the Ethereum that they have just lent to some other person. So for example, for 1 Ethereum that we are lending, we're going to get 1 credit coin. If we're lending 2 Ethereum or 2.5 Ethereum, we're going to get 2 or 2.5 credit coins. So always this 1:1 ratio. And the credit coin is basically considered as just a normal token, so we can either hold it in our wallet or send it to a different person, so we can make payments with it, we can make transactions with the credit card. It's just a basic normal token. And this basically means that the borrower is borrowing Ethereum and he's getting liquidity, but also the lender is he still keeps his liquidity because he's getting this temporary token that he can use while he's basically lending his money. But also keep in mind that the credit coin is given in a ratio of 1:1 to the Ethereum that we have just lended, yeah? But it doesn't mean that the credit coin will cost exactly as much as the Ethereum. So the thing is, it's not backed up by any cryptocurrency or by any other currency like the stable coins are. So the price will be only determined by the market itself. So just as an example, let's assume that the Ethereum costs $1,500 right now, right? And we're getting 1 credit coin. This credit coin might cost $10 or $100, or it might also cost $1,500 just like the Ethereum. The price will only be determined again by the market. And but also in theory, the price should always head towards the price of the Ethereum, and I'll give you some reasons why. Basically, the first and most important reason is that the credit coins, they don't live forever. So they're printed on demand, but they're also getting burned after some period of time. So the credit coins are basically printed out of midair once we're lending money to someone else. But once the loan is returned, this returned Ethereum replaces the credit coins. So the credit coins, they disappear after the loan is returned. But also, as I said before, these credit coins, they're transferable. So let's take for an example that we transfer 50% of our credit coins to our friend. What happens in these situations once the Ethereum is returned? Well, it's really pretty simple and straightforward. In that case, once the money is returned, so the Ethereum is returned, every owner of these particular credit coins will get a 1:1 ratio of Ethereum. So basically, if I had 1 Ethereum, I got 1 credit coin, then I sent a half of the credit coin to my friend, and once the Ethereum is returned by the borrower, I will get 1/2 Ethereum, and my friend will also get 1/2 of Ethereum for the corresponding credit coin. Or let's take a different example. I have 1 credit coin because I've lended 1 Ethereum, and I sent 70% of my credit coins to some other person. In this case, I get 0.3 Ethereum, and the other person will get 0.7 Ethereum. And of course, this chain may continue, so the person who got the 0.7 credit coins may send a part of it to a different person, and so on and so on. And all the people in the chain will be equally rewarded with Ethereum after the loan period is over. And the same thing actually goes for the interest earning. If we are the ones who are keeping the credit coin in our wallet until the loan period is over, so until the moment that the credit coin is being converted back to the Ethereum, then we will get all the interest earning for ourselves. But if, again, as an example, if we're sending 70% of the credit coin to some different person, then at the moment of the conversion, I'm getting 0.3 Ethereum, he's getting 0.7 Ethereum, but also I'm only getting 0.3 of percentage of the interest earnings. And the other person is getting 0.7% of all the interest earnings. So it's actually better to keep the CreditCoin inside our own wallet, but if we have the urge to make a payment, we may use the credit coins to make the payment. Well, and this is actually the reason why the credit coin price in theory should correspond to the Ethereum price, because every credit coin holder will get 1 Ethereum plus extra percentages after the loan is over. And remember, even if the loan is not getting paid by the borrower, the loss provision fund is still going to handle the matter and return the money instead of the borrower, so you will definitely get the Ether. Well, to sum up the functionality part, smart credit allows us to lend money to other people, to earn interest rates from the lended money. It also allows us on the other side to borrow the money, and the big thing about smart credit is that both the borrower and the lender are both keeping their liquidity, because the lender is getting a special token for a period of time while he's lending over his money. Considering the usage of the project, it's going to be used by normal people who want to lend or borrow money, also by businesses and merchants. And the business part is a really great part of the project, because it opens like enormous doors for entrepreneurs. Let me tell you why. Basically, if we are a merchant or a business, we may use smart credit to sell our goods or services on credit. If we like really simplify it, the way this is going to work is that we can give, as a business, a loan to our customers, but not in Ethereum, basically in our products. Well, we give the loan in Ethereum, the customer is paying our product with the Ethereum, and we instantly get the credit coins. And these credit coins we may either keep in our wallet and wait until they will be converted into Ethereum, or we may contribute them to the cash flow and make investments in our business, or for example, use them to buy some stuff or anything like this, or to send them over to different people. Well, I think you got my point. And this really provides a super fine opportunity to all the businesses and merchants out there, because they can basically insert this option right on their homepage, and people may get the credits with like a few clicks, and they basically buy your product without even having the money. So it's like a super great function. Well, now we've got the complete knowledge about the project and functionality of the project, so it's time to talk about the investment and market part. Right now the credit coin is traded at about $6, and its market cap is only $8 million, and it's a really low market cap for a great project like this. So really 8 million, it's like really nothing. And a really good example of the expectations of the token price and token growth is Aave, or AAVE, don't know how to pronounce that correctly. And it's a really similar project to Smart Credit, but Smart Credit is much bigger and has a lot more functions available. But Aave is already up and working, so it's basically a working project, and its token price went from $29 to roughly $380 in the last 6 months, and its all-time high was $555 roughly. And Smart Credit, with the solutions that it provides, it could easily repeat the same path, so like 10x's for this kind of project at this stage. This is more than easy. So we'll definitely have a look at this in the future, and right now we could be like really early investors because the project is not even ready and not even finished, so definitely have a look at it. And please always keep in mind that we're not advising you or recommending to take part in any of the project. Our team is basically just searching for really good coins, for interesting projects that we like ourselves. We're analyzing them and sharing our opinion about the project, and always make your own decision based on your own thoughts. That's a really important thing. And that's actually it for the video. I really hope it was helpful in terms of understanding the project, and thanks again for watching. I'll see you in the next videos. Have a super awesome day. Bye bye.